All right, good afternoon, everybody. Testing 1 2 3. Testing 1 2 3. Type a D in the chat. Type a D in the chat if you can hear me, and maybe type a double D if you could also hear me and see my screen. Hey, John, Stephen, Rachel, Anthony, good. All right, so what I did. Okay, awesome. Yeah. How's everybody doing today? We're gonna get started here in just a couple of moments. I think the screen's good. So we did this presentation last night. I know a couple of you were here last night. Did anybody else attend? We had a really, at least I had a fun time. The feedback so far today, really had a lot of feedback pouring into the inbox, and it was all positive. Some of you need a little bit more clarification, wanted to see it again, and we're happy to do this again live for you. And as always, ask all the questions you want during the course of the presentation. I will try to glance at them during the presentation, but as I always say, I like to pay attention to the presentation, the workshop, teach you the strategy, and then you stick around and we'll get to all of your questions and concerns. So let's see here. All right. Let's go ahead and get started here. My name is Silas Peters, the founder and head trader of Seasonal Swing Trader. This is a brand new presentation, brand new workshop. Very excited about it. Been in the works for months, and very pleased to be able to introduce it to you and those members of my community. And very proud of it. You know, everything's always a work in progress, so always appreciate the feedback, good, bad, or ugly. But this is something we've been working on behind the scenes, and very excited. That's all I have to say. So have any questions, always post in the chat, and I'll get to those towards the end of the presentation. So yeah, hopefully no tech glitches today. We had a little snafu last night, somewhere towards the end of the presentation. So I'm actually moved to my other computer, working off a laptop. That's a little bit dicey, I will say. So I was on a PC last night. We were moving along swimmingly and had a little bit of an issue, but then we were able to conclude and wrap it up successfully, I believe. And now I'm working off of a laptop. So did go ahead and put a small backup parameter in place just in case we have to move the slide situation. But let's go ahead and get started. So who here is new? Is this first time for who has seen this? Who has never seen this? Is this the first time for everybody? I know a few of you have already said you were here last night. Welcome, come back. All right, awesome. Well, hopefully you'll be pleased today, and let's get started. I don't want to waste anybody's time. So first of all, welcome. I truly mean, and I truly mean this from my heart, I thank you for your time, that you took time out of your day to be here. I realize everybody has commitments, so you spending 60 minutes or so with me in an effort to learn more, learn about the markets, master a high probability strategy, I think that is very important for you. So I want to say thanks. Before we begin, we must start with our risk disclaimer as required by the regulatory governing bodies and our attorneys who are required to share. Past performance does not necessarily give future results or substantial risk of loss associated with trading. Only risk capital should be used to trade. Trading futures, options, future forex, and securities is not suitable for everybody. You can lose money in trading. So what does that mean? Don't trade with your rent money, your mortgage money, your child's educational funds. You can lose money in trading. So before we start here, I want to make sure you shut everything down, remove all your distractions. That means closing your browser tabs, logging out of Facebook, Instagram, Snapchat. Put your phone on mute. We're going to be together for about 60 minutes or so. Even though we are recording, I can never, ever guarantee technology or that there will be a replay. So you'll want to make sure and listen closely and take good notes. And if you miss anything during the course of the presentation, I'm happy to answer those either during the presentation or afterwards via email. Before we begin, let me formally introduce myself. Simply put, I'm a husband, father, son, Love hanging out with my family, whether it be at the beach, on a boat, hiking, or on a golf course when I have time. I spend a lot of time working. I spend a lot of time in front of the screens. So I like to get outside when I can and enjoy the great outdoors. And this is just some pics of my family and I hanging out, and showed this last night and got some heat for it from some of you that know me and at my really lousy attempt to grow a mustache. But hey, it is what it is. So how did I get here? How did I get here where I have the privilege of speaking to you today? Well, in college, and if you haven't figured it out, that's where I went to school, the University of Alabama in Tuscaloosa. So in college, I majored in investment finance and economics, but I had literally zero clue or idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies, he used to be an ex-wheat trader in the grain pits of Chicago, and I've been fortunate enough to play with him several times. And he was talking about, asking me what I'm doing, this and that. Told him I had no idea. So we started talking, and after what he told me about what he did and the markets and things like that, I immediately went back. I was back at Tuscaloosa. I started doing some research on Chicago, the trading floors, pit trading, screen trading, and commodities and trading in general. And I was immediately intrigued. I was absolutely enamored by everything trading, especially the pit action. That was back in the heyday. The screens, commodities had a great interest to me because it's the world we live in, the things that move the markets, things we consume that are tangible every single day by the whole world. So what did I do after that? Well, needless to say, I was a bit greedy on the sleeve when I sold my car 3 days after I graduated. I rented a U-Haul truck and I drove to my new digs in downtown Chicago, a tiny studio apartment here on the 23rd floor of Marina City, those two honeycomb towers right there, overlooking the Chicago River. Now, I can say my balcony was probably about as big as my unit, but it was an awesome place, awesome experience. Had Smith & Wollensky's down here, the steakhouse, had House of Blues right there, had Harry Carey Steakhouse a block or two back, and all kinds of activity. And I couldn't even really afford a Fiji water there at Smith & Wollensky's. I don't know that I ever ate there while I was in Chicago. Ate a lot of steakhouse, but not that one. But so that's where I started. And actually, the same day that I moved in, I took the U-Haul truck back to the depot, and I hopped on an Amtrak train, and I scalped a couple of tickets to the U.S. Open. I scalped a weekend pass to the U.S. Open at Olympia Fields in Kohler, Wisconsin, to chase Tiger and Phil. So you can kind of say that was maybe my first trade. I bought the tickets, and the guy immediately took off. So I thought that was going to be a losing trade, but it ended up being good, ended up working out. But back to my journey or my career path, my first quote unquote career entailed this. And I want you to picture this. So I started working the Asian, European, and early New York session trade desk. So do you remember me telling you I sold my car, right? Well, this picture right here could literally be me walking to work at some time around, say, 6 p.m., 2 a.m., or if I got up early, maybe 6 a.m. I remember on numerous occasions me walking down the middle of LaSalle Street right here with the big Chicago Board of Trade and the God of Grain staring at me. Me and nobody but a couple of snowblowers, only ones in the entire city of Chicago. And then getting into the Chicago Board of Trade and the temperature reading a solid negative something degrees. Remember, I'm from Lower Alabama on the Gulf Coast, live on Mobile Bay, and the teens, I remember when we got into the teens, that was a godsend of warmth. If we got into the teens or the 20s, it was getting warm. So I did this for a few years right here, working at the Chicago Board of Trade, handling some serious size trades for our hedge fund across the Board of Trade, the Merck, NYBOT, which is New York Board of Trade, NYMEX, some of the other London and Asian exchanges. For our hedge fund, banks, CTAs, large floor traders, everything from corn to copper to hogs, euro dollars, Japanese government bonds. Incredible learning experience, both with the markets and trading, as well as just the Chicago big city life in general. But I decided to head back south when some other opportunities opened up. And that's what led me into the corporate world. That's when I truly went corporate. I went from fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life managing equity fixed income portfolios and other investment management roles here in this glass building. And to me, this was extremely boring, but it was the safe route. But however, I missed the action and the excitement of the pitch, the tape, the screens. And through some additional contacts, I was led to a trading firm where I helped run operations, execution, trading education to run a couple of futures brokerage firms, and then ultimately working in a family office doing all of this, serving ultra high net worth individuals. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading, the trading world. Me sitting in an office tied to a desk, I felt like I was rotting away, just looking out the window. And of course, dealing with the corporate red tape. It was just not in my blood. I wanted to get back to the markets, to the charts, to the trading. While I was still trading during this time, I wanted to be in the weeds of the market. I longed to be in the weeds of the market, following the charts, doing the analysis, and so on. So I finally left the corporate world once and for all, and I started as a seasonal swing trader. And that's where I publish research, ideas, and analysis to my followers. And it holds me and our community accountable each and every day in our trading decisions. But during this entire journey, there were certainly some painful lessons to be learned. I grew accounts, I blew accounts, grew accounts, blew accounts. I quickly learned that I was not a trading god. I was not above the market. The market does not care what your position is. The market does not care about your opinion or what you think it should do. And it really doesn't listen to your prayers. So what does that mean? Well, it meant blown accounts, emotional trading, acting like a gunslinger, and just really, really poor risk management. These are all battle scars. And in this workshop, I'm going to attempt to help you think smart, think logical, with a proven price action strategy and a plan so you can avoid the many mistakes that I, and I'm sure several of you, have made. But let's talk about you. Why are you here? You're here to have a reliable pattern for all market conditions, to have a strategy for all asset classes, and to be agnostic of market bias. So today's markets, it's imperative that we have a strategy that we can trade in both directions. We want to employ strategies that can profit during up markets, down markets, and sideways markets, and do so without guessing. Don't you want to have the potential to make money in any type of any market environment? You certainly have probably, I hope you have moved on of just thinking that you need to be long only. This is a certainly different market environment. Yes, the market has gone up. And yes, if you were long only and you've had time to recover, you probably have recovered. But we do not need to sit through those types of drawdowns anymore when we have a strategy to trade both sides. Why are you here? I'm going to show you a pattern that results in trend reversals. I'm going to show you the point where a trend is likely to reverse. I'm going to show you a pattern with the least risk and highest reward. So are you guys ready to see this? That sound good? Excellent. So are you ready to learn strategies not only low risk, high reward, but also works in all markets, all time frames, all asset classes, all market conditions, and any style? I'm not going to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market, any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol, and so on. And I don't care if you're a tick trader, scalper, day trader, swing trader, or position trader, or if you trade the underlying contract, or if you trade call options, put options, debit spreads, credit spreads, reverse crouching tiger, hidden dragons. It doesn't really matter. What I'm going to show you is powerful, and I'm going to prove it to you. But before we continue, it's very important that we cover the process. Has anybody here heard of Jesse Livermore? If you haven't, I encourage you to pick up a copy of Reminiscence of a Stock Operator. If you ever get the chance, it's a great read. And a question I often receive is, what do you think about the markets here? My typical response is, I don't know and I don't care. And I know that may sound like a bit harsh, maybe it sounds ill-informed or uneducated, especially when you're asked by friends or family members, but it's true. For the most part, I don't care, and frankly, I don't know. But I don't care about the daily news that flow in and out of the market. I'm a trader that trades strategies based off probabilities. So we're going to forget about market assumptions and only focus and trade with high probability strategies and what is front of you. No more predicting. So yeah, absolutely. And Roll Tide, yeah. So great book, and go get it on Amazon. You probably get a used copy for like $1 or $2. So successful traders possess 3 common traits. We must realize that knowing what is going on in the news and knowing how to make money consistently are 2 separate things. For successful traders, it's about your strategy, your logic, and your process. Doesn't matter what you think the market is going to do tomorrow. And I realize it's a difficult concept for maybe a newbie to understand, or even seasoned traders. I certainly want to form my own opinion. It's just human nature, but it took me years to figure out. It doesn't pay for us to try to absorb every story out there or slap every indicator onto a chart. All I care about is when the markets I am following reach key criteria. But there is one more trait, because if we allow probabilities and not talking heads to define our next move, we want to possess and control this one trait, and that is patience. Patience means that trades should never be forced. I don't know if anybody here has a problem with patience. I struggle with it, but once you master patience, you're going to be in a much more sound situation, because a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if you wish to bring in profits over the long run. Boring maybe to the aggressive crowd, but I'm more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario. I'm confident in trades that consist of the key criteria that are setting up, and which I'm about to show you. But patience is that key ingredient to the success of this strategy, and really all strategies. And again, I can't emphasize that enough. Forcing a trade is going to be detrimental to any long-term strategy. So what is a high probability strategy? It requires patience coupled with a disciplined approach. It means waiting for the appropriate scenario to unfold with a high probability of success. It recognizes that opportunities are made up easier than losses. If you let a few pass you by, we're not going to dwell on what could have been, what could have, should have. There will always be more opportunities around the corner. And then lastly, I realize that the less I trade, the better my strategy will perform over the long term. And the long term is what matters. This likelihood is what makes the high probability strategy unique and successful. So what indicators do I use? What is the secret sauce? What are the ingredients? So I learned early on to keep it simple. You need to really pick a few indicators, or one indicator or no indicators. Just pick a strategy and try to follow that. I can't tell you how many traders that I talk to, they want to follow Donchian channels, market profile, GAN, Bollinger Bands, fib retracements. The list goes on and on. This high probability strategy uses price action alone plus one very common and basic indicator, which is free, by the way, on your platform, along with a couple of pro tips to take advantage of sentiment and technical extremes. Has everybody here seen Jerry Maguire? Love it or hate it, it's a famous line. I can't show you the money, as he says in the movie, but because I don't know how you're going to trade, but I will show you the opportunity. So let's get to it. It's divergence. Wow, divergence. Some secret thing called divergence. What is divergence? Who here has heard of divergence? Who here has heard of divergence? Yep. All right. So divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns that the current price trend may be weakening, and in some cases may lead to the price changing direction. So basically, it's an indicator in price action being in disagreement. And we can use any relevant indicator such as a MACD, RSI. We'll look at all that later, but it's an indication of a reversal or a continuation, but more often a reversal. What is divergence? It can occur between the price of an asset and almost any technical or fundamental indicator or data, typically used by technical traders when the price is moving in the opposite direction of a technical indicator. Positive divergence. That signals price could start moving higher soon. It occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence points to lower prices in the future. It occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it so important? Because it is the earliest indication of a reversal or when to enter. It's also a good sign to exit a position, a good sign to scale into a position. It means you're usually buying near the bottom or selling near the top. Hint, that means the risk on your trade are very small relative to your potential reward. Let's talk about types of divergences. First one are classic divergences. Sometimes these are called regular divergences. Or you have bullish and bearish, classic or regular patterns. So a bullish divergence is when price action makes a flat bottom or lower low and higher low on the oscillator. A bearish divergence is when price action makes a flat top or higher high and a lower low on the oscillator. So traders use divergence to assess the underlying momentum on the price of an asset and assessing the likelihood of a price reversal. So if the market is making new highs, but the RSI starts making lower highs, that means the price of the uptrend may be weakening. That's negative divergence. Positive divergence is the opposite situation. So we imagine that the price of a stock is making new lows while the RSI is making higher lows with each swing in the stock price. So traders may conclude that the lower lows in that stock price are losing their downward momentum and a trend reversal may soon follow. Let's talk about hidden divergences. Hidden divergences is when hidden bullish divergence is when price action makes a higher low but lower lows on the oscillator, and that's normally what you would see in an uptrend. Hidden bullish divergence is telling us that the oscillator is recharging to go back up again, or is potentially the continuation of an uptrend. Hidden bearish divergence is when price action is making higher lows and higher highs on the oscillator, and that is what we would normally see in a downtrend. Hidden bearish divergence is telling us that the oscillator is creating space to potentially go back down again or resume its continuation in the downtrend. So regular bullish divergences. This is an example. It's the most frequent and is usually considered a sign of a reversal. So if the price is making lower lows, low, lower low, but the oscillator is making higher lows, low, higher low, that is regular bullish divergence. We don't need a series of lower lows. We only need one low to be lower than the previous low, and this can usually be found near bottoms. Hidden bullish divergence, this is a trend following type of divergence, as we just stated. If the price is making higher lows, but the oscillator is making lower lows, this can be seen when the price is in an uptrend, and it can indicate the price may tend to go higher. Regular bearish divergence. This is the most frequent bearish divergence, regular. It's usually considered a sign of a trend reversal. The price is making higher highs, high, higher high, but the oscillator is making lower high, high, lower high. That's what we call regular bearish divergence, and it can be typically found near tops. This is a hidden bearish divergence example. It's a trend following type of divergence. If the price is making lower highs, high, lower high, but the oscillator is making higher highs, high, higher high, this is this can typically be seen when the price is in a downtrend and indicates that the price may continue in its downtrend. Let's talk about identifying trend strength, and let's consider the following scheme. Buyers believe that the trend has recovered right here and they want to make money. So we start to open long positions and we drive the price higher. The trend accelerates as more buyers jump into the market. When we start getting here at point 2, buyers are taking profits and the trend begins to weaken. Buyers are still dominating, but they calm down because they're afraid that the trend is coming to an end. When there are no more buyers, the trend is likely to reverse, and that's when sellers step in and dominate and push prices lower. So we can use tools to help recognize the trend and trend strength. And one of those can be found with the popular RSI indicator. I believe the standard rule of thumb, if you will, is when price rises above 70, the market is considered to be overbought. And when the RSI falls below 30, the market is considered to be oversold. That's a great old story, but we want to use the RSI indicator in a slightly different way. So let's look at the same chart again. There are 2 significant highs labeled A and B in the price chart here, as well as in the corresponding highs in the RSI window pane down here. In the price chart, we see that B is higher than A. It means the price is still going higher. In the RSI pane, it's just the opposite. B is lower than A. It means that the trend has weakened and is likely going to reverse. And lo and behold, what happened? The market actually reversed. Now, we've used the RSI indicator in the previous example, but it can be replaced with any momentum indicator you wish to use, such as CCI, stochastic, MACD, and so on. All these indicators are derived from price, so there's really no better or worse indicator. It's only about preference. It doesn't matter what indicator is your best friend. Every approach is equally good. You have to figure out what works for you. But let's go back and focus on what matters, which is the divergence concept. But before we go into more examples, I want to quickly recap for context before we take a deeper dive. Bullish divergence is when price makes 2 significant lows, but the second is lower. RSI makes 2 significant lows, but the second is higher. Bearish divergence is when price makes 2 significant highs, but the second is higher. And when the RSI makes 2 significant highs, but the second is lower. All right, so back to the chart example. Regular divergence, we define that the divergence as a discrepancy between price and indicator movement. And note here that we've now added the MACD to the chart. So when the price makes a new low, but the MACD makes a higher low, we have a bullish divergence. This is signaling that the trend is likely to reverse. This is a classic or regular divergence pattern. The black line is showing the price sloping down. The black line down here is showing that the the MACD is sloping up. Okay. Deep divergence. So the depth of divergence is a bit subjective. It's a bit of a subjective term, if you will. When you look at this example, you're going to see 2 divergence patterns, a bullish and a bearish. The first divergence pattern is nice, but the second one does not look as promising because the 2 peaks or troughs on the MACD are not very significant. We consider a divergence to be deep if the MACD crosses the 0 line. So such a divergence provides a much stronger signal for a trend reversal. Other divergences can be used rather as an exit rule as they signal a trend correction. So let's take a look at another example. On this chart, we see 2 divergence patterns. The first example is almost a double bottom. The second example has a more defined peaking action. When we peak right here, the MACD line crosses below the 0 line. The signal line crosses below the 0 line, rises back up and forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the 0 line, it means that it is a higher quality divergence pattern. So now that we know the basic of divergence, let's look at ways we can approach divergence in a smart and methodical manner. We know that patterns can lead to consolidation, correction, or full trend reversals. That's great, but we also need to know where to enter, where to place our risk, and where to exit. Because with this strategy, you can make quick profits on small corrections or minor trend reversals, or you can try and capture major market moves. And when the trend reverses, every trader's goal is to try and stay with the trend for as long as possible. So we now know that divergence is a reliable pattern. Sometimes chart pattern traders see a double top. Elliott wave traders may see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see, what Elliott wave traders see, and this is what we see. Most traders don't realize that MACD or RSI divergence is exactly what they're looking for, because our approach removes the subjectivity because the divergence pattern is well defined. So now let's talk entry. Let's look at this into even greater detail with some charts. The first is entry. How do we enter these trades? So there's a couple of different ways we can consider entries, and that is a simple enter on next candle open. So we wait for the divergence candle to close right here, and we enter on the next bar or candle open. Pretty simple. Another method is to wait for a candlestick confirmation, and that's where we wait for a bearish candlestick reversal pattern, which is what we see here and again here, and we can hop on board. And then the same rules apply for a bullish. We wait for a bullish reversal candle or bullish engulfing candle in an attempt to get long. So we've covered entry. Let's talk about the least fun or exciting aspect of trading, but by far the most important, and that is stop losses or risk management. So one could argue all day long the best place to put a stop loss, but we want to keep things simple and objective. So for a stop loss with this strategy, we could simply place our stops just above the bearish divergence pattern or just below the bullish divergence pattern. In this example, we see that the second turning point right here, or really the point of divergence, the point that gives us our divergence pattern, can act as a minor resistance point, from which price uses to retrace, and we are thus protected from being stopped out too soon. So we've covered entry, we've covered stops, but now let's get to the fun part of trading, and that is profit targets, where we're actually taking money out of Mr. Market. So our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon, so we don't want to place the first profit target too far. It's wise to place the profit target at a significant support or resistance point, or what I like to call simple price structure. And that keeps us from guessing on an arbitrary amount of ticks or points. So the divergence valley that I've drawn here with this blue line is a good place for profit taking. Notice that we have very clear price structure at these levels. And price is likely to gravitate towards these areas each time like a magnet. In the next example, I'm going to show you how the price quickly turns back from this point. So here we see the market. Here's our entry. We're targeting this area. And what happens when we come to that area? We have a reaction. It's no coincidence that prices have a reaction at these levels. So by taking profits at these levels, we can profit from these patterns that result in very quick minor trend changes or corrections. We can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals. So we want to take advantage of these huge trends that can occur. And we'll cover that here in a bit. Now, candles. Another exit strategy is by using candles. When a candlestick reversal pattern or an opposite divergence pattern appears, that can also serve as a good place to exit. These are important patterns that can signal that the trend is going to reverse or at a bare minimum pause. If the candlestick reversal pattern appears close to that first take profit level and your order was not filled, it means that price has reversed from our support or resistance point early, and it would be a good place to take off some of your position. Let's look at the next example. So here is our entry point. We're working targets up here, and we can see that price has lurched all the way up to this valley area, but it put in a bearish reversal candle, sold off, retraced, came back up to that level a second time. We got another bearish reversal candle, and then this time it didn't just do a minor retracement, it drifted all the way back down and stopped us out. So that's why when we get up to these levels, you're going to expect sellers to start coming into the market, or you might expect buyers coming into the market, depending on your position. So that's why we need to pay attention to these and take some off the table and not worry about capturing those last few ticks. Now, another great way to trade this strategy is by adding a couple of moving averages to your chart. We add the following to our chart. This is a 34 EMA, that's the red or the slow average, and the 8 EMA, which is the fast or the green average. First look at this example shows that this candlestick pattern, this huge candlestick reversal, may have been a good place to exit. And there's nothing wrong with exiting that. We were well into profit in this example, but there's room for improvement. When we add that 8 and 34, yes, we may have been stopped out or had taken half of our position off here, but look at how far this trend continues. The price comes up, bounces off the slow EMA, the red one here. We have a chance to re-enter the market and continue to ride the trade lower into additional profit. And we can do that by trailing our stops above the swing highs along the way. So now we've seen numerous examples of how to catch the quick moves, and we've also talked about how to potentially catch larger trend type moves. The most popular approach among traders that I've seen is they exit at a certain number of ticks or points or pips. But if you think about it, that is really the wrong way. As you know, every market and every time frame has different volatility. So it makes no sense to go for some arbitrary 100 pips, 5 points, $7, $10 on a stock, and so on. Because volatility changes over time, and it changes over time for each instrument. So the best way to determine your exit is, one, you just need to test the strategy yourself on whatever market you're trading and learn that individual market's movement or rhythm. But I think there's an easier way, a less subjective way. So let's recap some exit strategies that work for these particular setups. One, structure. Plain old vanilla structure. Valleys and dips at significant areas of support and resistance. I don't think there's any question there. Candlestick reversals. If we get a reversal close to our take profit levels and your order was not filled, takes them off the table. Shouldn't be any question there. And then the second half of your position, or third, 2/3, whatever you have left, your balance, is just trail it by using an EMA. It doesn't have to be this combination, 834 combination, it could be anything. But you must trail your stops and lock in profits so you don't let these winners turn into losers. Now let's talk about false divergences. How do we filter false divergences? We know that when traders are trying to jump in a new trend, they need some confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we get a break of minor support or resistance. Nothing wrong with this, but with such approach, the entry can be too far away from the start of the move and the risk can be too high when compared to the profit. Our goal is to limit risk. We don't say that this entry technique is wrong, but there's a way to achieve more consistent profits. So where most traders are looking to enter right here, this is where we're looking to take a profit. We're looking to sell here and take profit here, we're looking to buy here and sell here, as opposed to be buying up at that level. Now, I want to remind you too that sometimes the MACD histogram can look choppy. This is the easiest chop zone indicator that I know of. So we can see here, the MACD is quickly reversing up and down, implying that the market is in a chop zone. This can generate a long series of false divergence signals. So to prevent overtrading, we found a way to recognize clear divergence patterns. Our golden rule says that the signal line must be crossed by two peaks. So if we look at this chart on the left, you see how the signal line crossed the zero line, down and then back up. On chart 2 on the right, there is no crossing of the zero line. We maintain above the zero line. Now, our goal is to enter as soon as possible after the pattern has formed. So our strategy gives a signal just after the MACD hook right here, or the turning point. And only after that MACD hook has formed, you'll recognize you'll recognize the second peak on the MACD histogram. And this is where we recommend entering on the next candle open. It's a very simple and mechanical rule. But we further fine-tune this into an even more reliable method, and that is by using trend lines. Experience has shown that trend lines can be used as a great confirmation tool for really any trading strategy. So when looking for a long signal, we can draw a trend line on the chart by connecting the minor highs, placing a buy stop order just above the trend line. When looking for a short, we place a sell stop order just below the trend line. And when the price breaks the trend line, we're in. It's almost the same as the quick entry method on the next candle open, but sometimes it protects us from a false MACD hook when the MACD turns against us and continues to fall. It's a bit discretionary, but it's pretty simple concept. And I find that it's one of the more effective ways to enter. And here's another example, but this time to the sell side. We place a sell stop right below the trend line, and we're triggered into the trade on a sell stop or a confirmation retest of that trend line break. So let's recap everything you've learned. You've learned a high probability reversal strategy, where to enter, where to place risk, and where to take profits, as well as how to filter false setups. But how do professionals trade it? Have you ever wondered why the market turns against us when we jump on a promising looking trend? The most tempting signal usually is a trap. Is there no more buyers to move the market? The sellers dominate. Is there no more sellers to move the market? The buyers dominate. Divergence masters know how to enter in the opposite direction just before the trend turns. And that leads me to this quote. Disregard the majority opinion is probably wrong. Yes, following the herd may work sometime. The 90s tech bubble worked until it didn't. The 2000 real estate boom worked until it didn't. Cryptomania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? When you trade this way, your winning batting average can be sub 50%. You don't have to be right 50% of the time. You don't even have to be right 40% of the time when your risk to reward is overwhelmingly skewed in your favor. But here's some additional pearls of wisdom. The less you trade, the more money you're likely to make. Filter the unreliable divergence patterns and focus only on the strongest signals, and use a customizable indicator that can deal with this for you. Whereas all the process of recognizing the divergence pattern in the chart is done for you automatically. And then we sit back and we enjoy the various exit levels to find and use what suits our trading style the best. But how do we do all this? Well, of course, you can scalp on the 1 minute chart. You can trade more smaller intermediate terms on the 1 hour, the 4 hour, or look for bigger swings using the daily, weekly, and even monthly. You can trade as many asset classes as you wish, but you need to be patient. That's the most important thing. Avoid over trading, because patient pays in this game. But how? How do we do this, Silas? There's too many markets, too many time frames, not enough time. Well, we've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, and scrutinizing hundreds of charts, trying to determine if what they are eyeballing is actually divergence or not. How? Well, we've cracked the code and we simplified the process. So who here is ready to trade like a professional and stand out from the crowd? Let me see who's ready here. I want to take a swig of water. This is where you want to wake up from your nap. All right. Exactly. Of course you are. I mean, seriously, it is, if there's not a time, I don't know when there will be. Let's move on from 2020 and let's start off 2021 with a bang. And if you are ready, I'm pleased to introduce Divergence Dominator Pro. DD Pro is a fully complete comprehensive trading business in a box solution. So let me guide you through what the Divergence Dominator Pro package is, so you can immediately see how it will benefit you in your trading starting as early as today. What all do you get? You're going to get the turning point identifier indicator. That's quite a mouthful, called the T.P.I indicator. You're also going to get the DD Pro scanner, Price Action Pro trading course, candlestick pattern recognizer guide, divergence cheat sheet, DD Pro trade journal, and the T.P.I fast slow line cheat sheet. But sir, what is this? That's a great question. Great question. I'm glad you asked. The turning point indicator, the T.P.I, auto plots divergence setups for you. It's going to scan the markets to locate key turning points across multiple markets and multiple time frames. Let's look at it in action. So you can now, in seconds, pull up your favorite chart, attach the T.P.I indicator, and bam, this is a daily chart of IBM. We can see that the bearish divergence pattern is marked by the red line connecting the significant highs. The bullish divergence is seen by connecting the lows with the green line. And this is our T.P.I in action. The bullish green arrow here, the bearish T.P.I sell signal down here. Let's look at another example. This is a daily chart of the US yen. We can now in a glance see major reversal turning points on any market or any time frame of our choosing. Here's our bullish T.P.I, our bearish T.P.I, bullish T.P.I, and bearish T.P.I. Here's another example. This is a 5-minute chart on the pound. Can everybody see this? T.P.I buy, T.P.I sell. What platforms is this available on? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MetaTrader 4. This is what it looks like on Thinkorswim. The indicator does not include these boxes. I was just doing this for a visual reference. You can see the T.P.I sell signals and the T.P.I buy signals in the bottom window pane. Here's what it looks like on TradeStation. The T.P.I indicator actually appears on the chart pane. And then here's what it looks like on in NinjaTrader 8. Bullish T.P.I, bearish T.P.I, bullish T.P.I, bearish T.P.I. TradingView, bearish T.P.I, bullish T.P.I, bearish T.P.I. Then lastly, MetaTrader 4, bearish T.P.I, bearish T.P.I, bullish T.P.I, bullish T.P.I. And we've also had a scanner built. We've had a scanner built for TradeStation and NinjaTrader 8. Of course, it's going to scan multiple asset classes in multiple time frames, and you can be alerted when potential setups appear. So if you've been trading for some time, you know that divergences are probably the most reliable and profitable setup for trading reversals. But here's one thing: Manually identifying these can be difficult. They can be time consuming, especially when you're analyzing multiple markets or time frames. And that's where the T.P.I comes into play. It's automatically going to help detect the highest probability divergence patterns for you with the click of a button. Here's a scanner in action in TradeStation. Here's a scanner in action in NinjaTrader 8. Now, combined, the T.P.I indicator scanner is capable of identifying divergences using all asset classes, all time frames, chart types for scalpers, day traders, swing traders, position traders. But aside from the indicator scanner, I really feel that the crown jewel of the Divergence Dominator Pro package is the Price Action Pro trading course. This is a 10-part on-demand video module course detailing all the following: key price action concepts, market cycles, identifying trend direction, identifying trading zones, momentum, key divergence concepts, identifying setups and entries, targets and stop losses, analysis for intraday trading, and analysis for swing trading. This is my only full step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the T.P.I. So you want to quit guessing, you want to feel confident about your entries, remove emotions, begin to think like a professional, and immediately scale your reward versus risk and have a solid trading plan? If so, then this could be for you. Yes, you get the T.P.I indicator for 5 platforms, the scanner for 2, but it's very important to me that I help jumpstart your success with the PAP trading course, because you see, this is all no really big secret. In fact, Divergence has been known and used for decades. But now not only do you get a first of its kind tool, an indicator that locates high probability turning points on your behalf, but you're also going to get the PAP course, which has all of the solutions to help you with each of these bullet points. PAPs will help solve these troubles in that very comprehensive trading, step-by-step on-demand video module course that can be viewed over and over again, and it never expires. Next, you're also going to get the Candlestick Pattern Recognizer Guide. This is not your grandma's guide to candlesticks. We all know that there are dozens of candlestick formations or patterns out there. This guide is short and sweet, and it only covers the most important candlestick patterns that you should focus on. It can be downloaded and printed off for your desk reference and study. Everything from the ins and outs, everything, only the ones that you need to focus on. Another incredible bonus is you're going to get the Divergence cheat sheet. You can also download and print. You're going to get a full Divergence summary guide on regular, hidden, exaggerated divergence patterns, the differences between each. This is great for those that like written descriptions and summaries that can also accompany the video modules. Now, the Divergence Dominator Pro package includes everything we just talked about. But what is all this worth? What is all this worth to you? If you're now able to profit in any market condition, if you can anticipate major market reversals and turning points, if you could trade on your own time, if you now had all the tools, a scanner, an indicator, the videos, the training guides, what would all that be worth? You no longer have to guess when to enter or where to set your stop loss and take profit levels. Everything's basically taken care of. But we have to determine if this is a fit for you. If you like scalping on nanosecond charts from dusk till dawn, if you love being stressed out and having heart palpitations, if you get a thrill out of blowing out accounts over and over again, if a gambling mindset and never have a clue where the market is likely headed, I'm sorry, we can shake hands and part ways. This is probably not for you. But if you are ready to think like a professional trader, you are ready to remove your gambling mindset, you are ready to get serious and treat trading like a business, ready to kick your emotions and focus and have confidence each and every time you place a trade, this could be for you. And if this is for you, we have a very special offer for today's workshop attendees. It's called the Divergence Dominator Pro. So the T.P.I indicators alone cost over $2,000 to build for each of those platforms. The Pro scanners for TradeStation and NinjaTrader 8, $1,500. The PAP course is a $500 value. All of the cheat sheets and guides are another $400 plus value. That brings the total value to over $4,400. But I am very proud of this indicator. The course, the scanner, all the other educational material, I want to get this out to only those that are serious, those that are tired of kicking the tires, those that are sick of jumping from system to system, those that are ready to remove emotions, and those that most importantly are ready to take action and see real results. I'm not going to charge you $4,427. I'm not even going to charge $2,999. I'm not even going to charge $1,999 or $997. As part of this live webinar special, we're pleased to offer this to the first 25 signups for a single one-time fee of $297. Yes, this is a one-time fee. You are seeing this correctly. One-time charge of $297 to the first 25 signups. The offer link is seasonalswingtrader.com/dominate. I'm gonna put that into the chat so you can click it. Let me know if it works. It's 93% off the $4,400 value. You're gonna get the indicator suite, the scanner set, the PAP course, the guides and cheat sheets, all for a very low fee of $297. You own it for life. You own all the educational material, the indicators for life. No questions asked. It's yours. Now, before I get to all of your questions, I quickly want to cover one more thing. I often get asked, how do I trade these? Silas, how do you trade these setups? Well, the easy answer is that it all depends on the situation. My overall outlook, if I had coming into the day or that market with a shorter time frame, a more intermediate to position based, whether there are positions I have, the risk reward of that setup, a lot of different variables. I personally like to trade credit spreads, but I will trade both debits and credit spreads on equities, commodities. Also trade the underlying contracts and futures and FX. But what or how I trade really doesn't matter. Frankly, you should never be concerned with what I or anybody else is doing. You have a question or idea, shoot them to me. But at the end of the day, you are in control of your own account, how much capital you have, your knowledge, your risk tolerance, and how much time you can personally commit. We're all different. We're all trading different styles, different account sizes, have different risk tolerances. So it has to be something only you can answer. But if you ever want to ask me a question about the strategy or a market, I am all ears. Yeah, the offer link is seasonalswingtrader.com/dominate. So let me scroll up. I'll be happy to show you the members area for those that want to take a sneak peek on the inside. You pull that up one moment. Oops, I think I closed my screen down. A second. Everybody see my screen? I think I flipped a switch. Okay, so I'm proud to have gotten through this with pretty much no tech difficulties. Yeah, you're absolutely welcome. And we're still working on some TradeStation, making some edits and updates. All updates future now and going forward will be included. We're at no cost. We're not going to say, hey, we made this update, it's going to cost you $1,000. No, well, we make updates. When we make updates, it's very expensive. We make updates, we have to do it across all platforms, but we're happy to make this better, always looking for improvements, suggestions, feedback. So we welcome that kind of stuff. We're not going to be anything set in stone. This is my way or the highway. We want to make this better for everybody. Does T.P.I use a specific oscillator? Use a piglet when you like. The T.P.I is its own kind of proprietary custom indicator using divergence. But if you wanted to compare something, it's similar to a MACD. But as I said, you could really use any momentum oscillator. It's just a personal preference. Ron, not built on wealth charts at this time. Appreciate that, JMF. Think about using DIVERGENCE. Yeah, I do absolutely use it in conjunction with the 1, 2, 3. So I have this plotted onto my charts with the 1, 2, 3, and I will trade those in conjunction. When you have both of them in line, it's kind of a gravy icing on the cake. Yeah, we are looking to build a scanner for Thinkorswim. If and when that's possible, we will send a nice little email. I'm glad you asked because it was asked last night. And as I will tell you exactly what I told the individuals last night that asked, I'm your biggest cheerleader for getting this built on Thinkorswim because it's my primary platform. I don't use TradeStation and I don't really use Ninja. So I want this built on TOS. That's actually what we started out with, and it became really a bear because of TOS's limitations, apparently. I don't know, I'm not a programmer, but so we moved on to getting it done on TradeStation and Ninja with relatively no problems. So now we're back focusing on TOS, and I'm cracking the whip to try to make that happen. Yeah, I'll certainly consider maybe some type of chat channel. We'll looking into that and see if maybe we can make something happen there. There were some really awesome setups, by the way, today using the T.P.I on shorter time frames, combined with the trend line technique I just showed you. No, we'll not have to pay extra for the TOS scanner. We're happy to throw that in the bag whenever it's ready. Look, if you're going to hold me to it and it never comes to fruition, then I would just say don't purchase, because I can't make any guarantees. But I feel pretty confident we'll get something done. The indicator is very complex, and building a scanner around it has proven to be really complex to TOS's liking. So didn't have any issues with Ninja or TS that I'm aware of so far. TOS has proven to be another bear. So here at the indicator, the scanner, installation guides, here's all of your modules. This is, I really encourage you to go through this. This is not, these are not multi-hour long videos. I'm hoping they won't put you to sleep, but to me, they're really the key concepts and basis of a lot of the methodology that I use. And this is primarily how I back into the markets, and I'll look for the T.P.I coming into alignment. Now, if you don't want to watch this and watch these concepts and understand really the basic premises of structure and supply and demand, you can use the T.P.I for sure, just kind of naked as a standalone, but I think you would benefit much more by going through those. It's really the only video course I have. Which market do I trade? Also known as what markets does it work best on as far as consistency? You can't really say it works on one market better than the other. it's all about movement of that particular market at that time. You can scroll through. I mean, just common sense, I would say stay away from very illiquid markets, illiquid markets that have sporadic swings. I mean, does it work on penny stocks? Maybe. I really haven't personally charted any penny stocks, but when you look into the lower time frames, so I was running a 2-minute time frame today, and there was some outstanding setups really on the more liquid futures contracts, S&P, NASDAQ, gold, 30-year bonds, crude oil, really just that handful right there. And you can just go back and plot them yourself and look at the T.P.I and or use the T.P.I fast slow line. Sometimes the T.P.I fast slow line catches moves a little bit sooner than the T.P.I indicator itself. You just go back and play around with it. I can't say that it works in one market better than the other. It just requires some movement on the market's behalf. So therefore, there's no, we haven't run, we don't have a whole system to run that analysis. Any tweaks, just based on any feedback, if we run into any minor bugs, which I don't think, I have not had any reports back from any yet, but we may just look at some additional enhancements, and we would include that across the board. I've really yet to figure out what all that means, but just being fully transparent, honest. If we do make any updates, just similar to what we've done with other indicators, based on a lot of feedback from users, their experience, they say, hey, this is great, but what if we could add this or that? We take it all into consideration. Doesn't mean it will happen, but we'll take it into consideration because it will benefit everybody, and that's what we want to do, is help everybody here. That file should be the same JMF. If you have a problem with that, just send me an email at support@Seasonal Swing Trader. ELD, yes. Smart Market Scanner is a purely, it's just purely based off of seasonality. So that's an entirely separate deal. Yeah, we'll take a look at some live charts here. Oh yeah, absolutely. This is awesome. I've been using this personally for several months, but I've been waiting, going back and forth with programmers and all that fun stuff before we were able to kind of pull this out of the hat. All right, great, thank you. All right, let's see. Just a couple of other questions I'm trying to go through here. You get all platforms. No, they do not repaint. This is neither a subscription or a renewal. It's a one-time fee. It's just a one-time charge. All right. Okay. So here is the euro currency. Of course, we had Fed news today. Looking at the last couple of signals here, and why I like to use trend lines really in any analysis is we can, this is the longer term trend. The longer term trend is up. You see the moving averages are also pointing up, but in order to catch some of these reversals or trends, let me just maybe hide these so we can see a little bit cleaner. We can not, if you don't have the MA overlay, you won't see them, but sometimes you'll notice that the sell or buy signal may be, you're really trading against what the MA trend is. but that's kind of the point. We won't be able to catch those high probability reversals if we take that into account, because we're technically, the price action will always be above that moving average to the sell side, or will be below it to the buy side. So connecting these average, or I mean these trend lines here, we can see that we might get a sell signal right in here, but by using that simple trend line technique, we're able to catch a nice move here from 120.55. And I would target right here, because this is the breakout, and this is a 4-hour chart, by the way. This is the breakout of that level. That's a 15, is it where we get short, 150? It's about a 65 tick move, 65 tick move there. That's like an $800 move there on the euro currency. Now we get a potential buy right here with a trend going up, and we have a little trend line break coinciding with the longer term trend line, and we get a huge move to the upside. First target naturally would be these highs, which is what we get up here at 121.75, and it's continuing higher. Let me look at some of your requests. Baxter, see, all right. Oh, daily, we need to put that on a daily. So Baxter, I'm actually long this in one of our services. So we get, let me scrunch this together. So we get a couple of nice sell signals back in here, get a nice buy signal here, little nice short-term pop here, and a nice buy signal right here once we cleared that little resistance area. JPM, so we get, so the way I would look at this is we have potential sell there, we get, there's another trend line there, we get a sell. So if you're trading credit spreads, this is really, this is great because you're making money if you're selling out of money call spreads. I see another trend here. Here's when we get our sell signal, and then we break down and we get another potential sell signal right here that we could consider getting short. With our risk is up here, very tight risk. So 124 is our risk, and we're targeting down here to 105. And if you sell money call spreads, the market could still jingle and jangle upwards and not do anything. MRNA. All right, so here we've got, so coming back to this there. You can see these minor trend lines being broken with our sell signals, and it's getting a little choppy up here at these levels. But there, our sell signal came in here, but that's not a good area to sell. Let me see. Does it work in conjunction with previous indicator? What indicator would that be? Just make sure I understand the question. Yes, Anthony, you can download them on both platforms. All right. Yeah, let's look at the 4-hour yen. 4-hour yen. I found like the 1 hour and the 4 hour on currencies, and it could be currency futures or FX. I like the currency futures, and I like the currency futures on the hour, 4 hour. I prefer the FX on the 4 hour and daily. But here's a nice little buy signal. There's a nice little buy signal. Probably a losing trade there. Looking pretty bearish, and then we start breaking down, and then now we're starting to get a few after that trend line broke, and then we went and made higher prices. You can adjust that trend line, And as long as we connect the series of lower lows, at least 3 of them, we have a trend line. So we did get a pierce through today on that Fed news, and looks like we're putting in a bullish candle there. Bitcoin daily. Let's see. All right, so it's been trying to get us to sell this puppy. And depending on how you draw your trend line, I didn't have to think about how I drew that trend line. It's exactly how we draw it. So the trend line has been respected, so I'm just ignoring those arrows. Yeah, Ron, no problem. Yeah, so I do have both of those plotted onto the chart. And you'll see those kind of work hand in hand. Sometimes they'll line up, sometimes they won't. But when they do, it's a double whammy that you should, further increase your confidence of the trade. Yeah, I can go back to the members area one moment. So here's your members area. Hopefully it's pretty straightforward and simple. Your indicator downloads, scanner, installation. Here of all your modules, you just click on it, hit play. Your trading journal is an Excel file. It's a pre-built trading template for you to enter your trades and track them. And then here is all of your guys down here. Yeah, you can adjust the fast slow lines. There's really, yeah, my guy can log into your computer via remote session, help you install. He's out. He'll be out by the time we wrap this up, which we're about to do. So he will get back to you tomorrow morning if you need any type of installation help. But work on Indian stocks, yeah, it works on any market that you can chart. Let me see if I can pull up a 2 minute. So I'm not running TOS right now because it didn't want to throw the webinar platform into a frenzy. So if I go to gold today, let's just go to the continuous. And how do I change? Does anybody know how to change the minute? Never mind. Minute. So add the 2 minute. And I will say that each platform is computing different data, if that makes any sense. So if you go back and look at this on TOS or TradeStation, it may slightly vary by a bar or so, but it's really not significant. So this is what I was talking about here. You would, this is a clear trend line. We get that break and a nice sell-off. We have that confirmation. And this is be purely for scalping. Those are a couple signals. And then really, if you, even without the arrows, you can see there's a lot of good little trend line break trades in here. So we've got so we see these fast and slow lines crossing down here. I think it's better to wait for the arrow, but if you don't get that and you want to get on board, you can try these fast slow lines. But so the arrow is like putting me on alert. I'm not just going in and just selling. Once we start seeing that breakdown, we see some exhaustion at these levels. We get that again right here. So we're breaking down. We've got divergence clearly coming in. Have divergence clearly coming in here, looking for a buy. So does that help? That's on a 2 minute. So really a lot of good scalping opportunities. No, we don't have a trade room. Yeah, test that out. Let me know how that goes. it's pretty simple concept there, and works. Proof's in the pudding right there. All right, yeah, folks, the offer link is seasonalswingtrader.com/dominate. I'll go ahead and wrap this up. We're about 20 minutes past the hour. I did tell you it'd be 60 minutes. So want to thank everybody that's joined. I think so. I see some of you a lot. Can't tell how many. So you've joined. If you've got any questions or issues, email me at support@seasonalswingtrader. I'll try to address those today before I step out. And then from a technical standpoint, my guy will be in tomorrow morning. He'll help you out there. See, how often do they occur? I mean, that's impossible to answer. It just all depends on the movement of the market, time frames you're trading. See, no divergence methods, and this seems to make sense. Awesome. Very, very pleased to hear that. All right, guys. If you have any feedback, questions, comments, you know where to email us. Look forward to hearing from you. Look forward to working with you. Hope everybody has a great rest of your day. Take care. Have a good evening. Good rest of your week. Good weekend, and stay safe out there. Yes, we'll try to get the recording out probably by this weekend. Awesome, JMF. Glad to be able to help you, and I always appreciate your kind feedback. Everybody take care. Have a good evening. Talk soon. We'll see you on the flip side.